Morning all. How are we doing? Ooh, sorry. Just opening my my breakfast. I have a smoothie for breakfast, and obviously Thursday mornings I'm always late because I have a spin class. So and relax. Morning, Andy, Peter, Tammy. How you doing? Excuse me, drinking while I'm doing stuff. Right, let's have a quick look at news today. It's the end of the month. So today's news, we've got GDP for the CAD at 130. We've got US PCE at 130 as well, and then unemployment claims. We've got PMI at 245. PMI doesn't tend to do an awful lot most of the time. So most of the news is going to happen pre-market ahead in New York this afternoon at 1:30 for the CAD. CAD GDP is expected to increase. So if that doesn't increase, we may well see a drop in the CAD. We had quite a strong CAD yesterday, kind of out the gates. So they may have been manipulating the CAD ahead of GDP numbers and drop it back down again today. So watch out if you've got any CAD pairs on. We've also got OPEC all day today. So anything to do with oil quite often has an impact on the Canadian dollar as well. So it's a big day for the CAD. So watch any CAD pairs you've got out there at the minute. Morning, Diamond, Chad. Ferdinand from the Philippines. First time in the room. Well done. Welcome. Sorry. I'm drinking breakfast and trying to talk at the same time. I literally get back in the house at 10 to 8 from my class. So it's like run. So I'm totally unorganised on Thursday mornings. News-wise overnight, also there's not a massive amount of news from the overnight session. We had Russia announcing 15 minutes ago, they're considering options for halting gas supplies to Europe. That's Gazprom. So there is potential impact today on gas and oil. Obviously, that's had a big drop already this morning. Wow. Oil fell out of bed this morning. Yeah, buy that back up, I would. Not quite sure why that's fallen to ADR already. There's nothing hit ADR so far in Asia. So Asia looks like it's been pretty calm and quiet so far. So morning, Stevie. So yeah, quick look at the, got 2 minutes to the open. Quick look through the indices, what happened yesterday. So we had our down day. So we got the down day that I was hoping for yesterday on the DAX. And if we look on lower time frame, they came down below the previous day's low. So this is what I was looking for to show some signs that we are going to get rejection up here and potentially come down and fill this gap. So hopefully today, we've gapped up today by the looks of things. Yeah, we gapped up today. So the opening play today is going to be a short. And look to get this gap fill, and then potentially look to get the gap fill further down. So still anticipating a bear market. We are up at 72. We're rejecting nicely. And we've broken down yesterday to new lows. So this is where we're going to go from potentially. The other indices in the US, we had inside bars. So nowhere near as weak on the other indices. The Dow, in fact, closing basically back up at where it opened. So, so difficult to tell. The US indices look bullish. The DAX, however, obviously is starting to look a little bit more bearish. So we will see. Peter, US easing 1 million BBL day from now on. What's that mean? BBL? What's that? Oops, sorry. Zoomed in a bit quick at that. Oh, come on, Lee. Use the buttons. Well done. So I'm just going to monitor the Dow and the DAX this morning. DAX has flown up. Stupid highs, so we'll give it 5 minutes to settle down. So gap fill is down here. Wow. Indices off this morning on a right mission. Weakest currency today so far by the looks of things is the Australian dollar. So it moves down on the Aussie. That's the yen up to today. Nice moves down on the yen again. Really nice moves down on the yen again. So what's that pound odd? We should have a good rise on the pound odd. Yeah, lovely. So pound odd, for those in it, we're back up at previous highs. So that's good. So we're moving in the right direction. So we've got the reversal alert, we've retested, and we've pushed up to new highs. We're in this accumulation. Remember I said on this one, and a lot of these actually, including the yens, we need to break through these accumulations. Every time we break through accumulation, we're coming into a new accumulation. So it's going to be really hard work for the pound odd. We need that weak Australian dollar. That's the main area that is going to challenge the pound up there. So 200 ADR today. It's not, could get there today. Pound easily does that, but barrel. Oh, okay. Yeah, so US releasing 1 million barrels a day. So they're helping out, obviously, net producer of oil. So the US bailing out the world and obviously being paid lots of money in the process. So good for the US economy. Right, just quickly adjust these fibs because these fibs don't really mean anything. And that one doesn't. So the fib I've got on there at the moment is yesterday's move. I'm just going to get rid of some of these lines. Got way too many lines on here. Oh, I'll just remove the gap. Let's put the gap line back. There. Okay, so we're at 61.8 retracement of yesterday. Pushing back up. So let's put yesterday's high in, or previous day's high rather. That is a strong support resistance level. So the 38 is strong support resistance from these points here. So we need to watch that 38 level on the way back down. We struggled to get there. When we broke through that level, we bounced off that multiple times, this level. So very strong, the 38 retracement from yesterday as well. Something to look at. "30 seconds to this candle's in. Okay, short in one on the DAX. Putting a sell stop below this low as well for the opening range breakout to the downside if we're going to get it. So we had a fairly nice rejection there, 50% rejection on the opening move. And then hopefully break that low and come down and get this gap fill done. So this level here, 38, is where we need to be paying attention on the way down. Likely to find a bit of support down there if we get down to there. can I trade my account? Bear me a sec. Oh, that's why I can't trade it. Morning, Neo. So my Forex funds, the evaluation account, I can't trade on it for some reason today. I was just wondering why I couldn't trade it. Da, 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 da. Done. So I've passed. Upgrade. I won't do the upgrade process now, but upgrade to live account now. So take a couple of days and then I'll have that funded account and we can trade that. Right. We're stalling at the minute. Inside bars across all the indices. That's interesting. They lock your account out when you pass the evaluation, so you can't trade it anymore. That's good. Good to know. I was just going to short the DAX, but I won't. Wonder how many days it takes. Anybody got a MyForex funds funded account? I think it's a couple of days until you get the account, so I'll get all the paperwork in today. I should hopefully have it for trading on Monday. Be nice. This will upgrade your account to the next phase or scale your accelerated account. Yes. My certificate. Ah, that's nice. Certificate of Achievement proudly presented to Lee Sampson. This trader has successfully passed the MyForex Fund's evaluation. Through discipline, hard work and determination, this trader has proven themselves capable of achieving the required profit targets within the associated risk parameters. Who's he? Murtuza Kazmi. I'll post that in the Telegram group. Okay, just broken the lows. Second short. Hopefully we don't get rejection down here. Just going to push my TP down. Not going to get greedy with this opening range. Just going to try and take it to that high. Should get down to the close of yesterday, really, if we're going to do the gap fill this morning. But see if we can get there. I've had those certificates before, you know. They're as easy to lose as they are to get. Huzzah! You've been watching The Great, haven't you? Catherine the Great. It's a good program, that is. Very funny. Didn't know where that huzzah comes from. I'm assuming it's a Russian Hooray. Just putting back inside opening range in a minute. Don't do a retracement on me, please. Oh, here we go. Whoa. Big retracement. May get stopped out of this second position here. Hopefully we're not going to get the same as we did yesterday. We had literally Christmas trees for the entire New York session for a good hour yesterday with no direction whatsoever. Okay, new highs in. Going to get stopped out on that first position. Second position, rather. Maybe not. That'd be nice, wouldn't it? Bouncing off the 61.8 retracement of yesterday to the pip. Dow's pulling back up inside. So is the DAX and the S&P. So they're all indices at the moment are in sync this morning, which is nice because they weren't yesterday. Stopped out on that first one. 0.5%. So I'm going to put that back on the break. So hopefully this is just an inside bar retracement on the opening range. And then we'll pull back down. But there is the possibility, obviously, yesterday we're going to want to retrace today. So the fact that we gapped up today is why I was playing this gap fill. We've actually gapped up more than 50% retracement on yesterday's move. So I'm expecting them, quite often after you get a big strong push down, you get a retracement. So if we're going to do, this is a better example here. So when you get a good down day and you're expecting excuse me, the continuation trend to the downside, you get a pullback day, which comes up to usually around 50%. So I was expecting a 50% retracement and drop, which we're obviously not getting at the moment unless this just reverses again from here. But because we gapped up roughly 50% of the move already, that was the reason for playing the short this morning. And I'm obviously assuming that we are going to come down and attack this, but it's seeming less and less likely on this DAX at the minute. It's really, we had this 2-week accumulation where we didn't go anywhere, and now we've broken out of it and rejected down. This, to me, yesterday is typical of a false breakout, trying to get up and then breaking back down again. Then you would expect to run away the next day, but maybe this is a breakout. Maybe we're just going to accumulate up here. So the market's just really out of sync at the minute. So got to pick a directional bias one way or the other. Opening range highs being retested. Nasdaq's done the same. So has the S&P. All pulling back off the opening range highs. Bit of a choppy open again. US dollar's coming down really hard this morning. Lovely moves on the US dollar. Which is why we're getting some buying pressure coming through on the indices. They tend to do the inverse to whatever the US dollar is deciding to do. Canadian dollar. So this is, at the moment, looks like we've got a very, very strong yen this morning. Very strong moves on these yen pairs. Anybody short on the yen got this strength that we've been waiting for such a long time is finally starting to show its face, which is great. Canadian dollar also pretty strong out the gates this morning. Yen is stronger than the CAD. And I've got a fairly strong Swissy as well. Big drop, US dollar CAD. Gold didn't go anywhere yesterday. Again, we're still stuck. Anybody trying to long this? I mean, this for me at the moment. This is a long gold, but at the moment, trying to pick where we're going to long from is very hard. We've just been sitting in an accumulation now for weeks on this thing since sort of 11th, 12th March. So we are weeks in to going absolutely nowhere. End of the month today as well. So we could well see some very decent movement today as the institutions balance their books for end of month and end of quarter. So it's a big reporting day today, end of month and end of quarter together. It's a shame they couldn't time it to be non-farm payroll day because that would have been very interesting. But so we may well get a decent amount of movement across the board today. So be worth watching the ADRs today. Anything that pushes up above ADR may well be a very good retracement because they'll just be pushing to get to levels. Still pushing on the DAX, trying to get out of these highs. We're double topped at the minute and holding, but still got 2 minutes left on this candle. This looks bullish. So may flip bias long today. If we get stopped out on this one. Yeah, Dow's going. So looking for highs on the Dow. I'm not quite sure where the DAX. Oh. Yesterday's gap didn't get completed, did it? Didn't spot that. I forgot all about that. So basically what we've done, remember I said, yeah, so these are taking 2 days basically by the looks of things. So that was the gap fill that we tried to play on Monday. Where are we? Thursday, Tuesday. We got it shorted down to there and it didn't quite make it and shot off. Yeah, so we gapped down the next day. Yesterday, we completed the gap fill. Made a new gap. Doesn't look like we're interested in that this morning. Logical thing to do now is come up and fill that gap fill today. So I'm looking for 148.30 as a target today. Long. It's going to do one or the other, and it's tricky at the minute because we're bang in the middle of these two gaps. So one of those is going to be the target for the day. We need to determine which one it's going to be. That's a good start, isn't it? Minus 1%. So I'm going to look for pullback longs. We just tapped into that support resistance zone. Okay, buy stop above the highs. That's an IRB. Inventory retracement bar. So it's pulled back more than 45% off the highs. So looking for a break. And obviously any bearish price action we get, be looking for breaks of the highs. We didn't manage to make new highs on the opening range in the Dow. Nasdaq made new highs. S&P made new highs. Just keep an eye on that one. So let's have a quick look at the RSIs. Again, RSI is flat. on the hourly. Got nothing there to look at the moment. Euro CAD and Euro odd are the only things close at the moment. Potentially, yeah, so all the euros basically are not far away apart from euro yen from the highs. So all these euros on the hourly charts, just going to keep an eye on those on my other platform. So all of these euros are approaching the highs again. So we've had the pullback, next leg up. I took a euro US dollar short yesterday as well, which didn't play out. I got stopped out on that one this morning. So I took the short here. Had stops above the highs. Oh, did I take the short there? Hang on, let's have a look. Yeah, it's this level here, wasn't it? So I got stopped out on that one this morning. Sorry, yesterday before end of play, I think. Yeah, it was in here. And we've pushed up a little bit more this morning. So Euro US dollar obviously is massively extended still. So it's worth getting in on another entry on that one today. Just going to have a quick look and see if there's an entry now. So I'm going to go short on that as well this morning again. Don't really have a target on it. So stop above the Asian highs. Going to give it a little bit of breathing room. I'm looking for a big drop on this today. So we've got a bit of a weak US dollar out the gates. Obviously, we've got US dollar news this afternoon. So all these euro odd just getting extended again. All coming up into really decent levels. So we've got 50% retracement. Let's just move the full screen. 50% retracement level on that move down. Had the reversal alert. We've pushed back up into the 50. So anywhere around here potentially is a short opportunity on euro odd. Obviously, we know the odd is very, very weak at the moment. Euro CAD just rolling over now. Again, that looks like a 61.8 retracement. It's a bit higher than that actually. Can't really measure the whole move because we had a big pullback there. So that you could say that is the move from that high. That's a 50% retracement on that move, and then we dropped all the way. So potentially you could class that as a 61.8 retracement. I'd be more inclined really to measure where the move started, which is there, because that was just potentially a profit take move off of that leg and then an accumulation. So that's really where it started from. So we've actually broken above the 61.8. You know, this is the danger with indicators. You can curve fit indicators to look perfect on anything. That is a valid sell. That is a strong support resistance area we've tapped into and we're rejecting. So good, looks good for a short Euro CAD. Potentially we're going to get some CAD strength this afternoon. We've got CAD news. If CAD GDP comes out at 2% or above, quite 0.2% rather, quite possibly we're going to get a big drop on that. So looks like a nice potential short there as well. In fact, that might be a nice little one to take as well. And again, all these euros got long way to go. Long way to go. Good level that. Like that level. All that resistance there. Sorry, not that bit. But that is a nice support resistance level there. Draw it in properly. Whoops. There. So it's that level there. Yeah. We bounced off of this level multiple times. So we came down, rejected, broke through it, accumulated, rejected, came up, broke through it, turned into resistance. That's always how you can tell if the support resistance is strong or not. Lots of people look at support and resistance as areas where we've touched it a few times and then we might have gone off. So that's a lovely support. But when something has become support and resistance, it makes it much, much stronger because it's confirmed that that is definitely a level that we were trying to break, and now we're not interested in going higher. So this first retest of that level is quite often a decent rejection. So nice looking short there on EuroCAD. Euro Swiss, again, that's sideways, that one. Euro Pound have just come out of an extension on that one. Euro Yen we know is obviously coming down. Euro New Zealand, just about to get up on an extension on that, and Euro US dollar, which I was just going to take a second on. So got two trades there, potentially look good on the Euros based off of the 1 hour RSIs. They're not extended yet, but they're at decent levels. The reason I like this one particularly is because of this propulsion move here. So we had this really nice accumulation, pushed out of it, pulled back, we've pushed up again. We're going to come back and retest this area at some point. Just waiting for US dollar strength. We've got non-farm payroll coming up. We've got news this afternoon as well in the form of PCE. So yeah, looking pretty good potentially for shorts. Morning Llewellyn. Just see what was happening with these. Okay, so we've had 1 bar pullback. Officially looks like this candle is trying to break. We've got 2 minutes left, but we're trying to break this opening range high. So I fancy this long this morning based on this price action. Right, so 4 hours. Same candidates. It's all the same candidates at the moment. Everything that we've been in is playing out. So Euro odd getting extended now to the upside. The only thing with this one, obviously, the Euro odd and the pound odd, we want longs on the pound odd, really, don't we? So we've got this nice weak Australian dollar at the minute, which is allowing this to rise. Same with the pound odd, but any kind of strength that we see coming through on the pound or the euro is obviously going to help accelerate this move. But if we get any strength coming back through on the Australian dollar, we're going to see this coming back down. But the fact that the yen is now powering up and we're seeing all the yen pairs come down, that is why we're seeing this Australasian sector move the opposite direction. So we were expecting when we get the yen strength for all the money flowing into the Australian dollar and the New Zealand dollar to wane, and that's exactly what we're seeing here. So we're seeing the yen strength and we're seeing the Australians weakening. So as long as that yen keeps pushing hard and they keep powering that up, we will see all of these continue to go. So this is nicely extended, but I think this has potentially got a little bit more movement up in it. As long as we're getting this continuation on the yen. So somewhere in here, potentially we could see a 24 bounce, but we could also push up a lot higher on this one. So pretty tricky, but from a position trading perspective, obviously the euro is probably the safest thing you can position trade, I think, at the minute. So you can always take an entry on that extension. You've got another extension at the 24 there, which if we do get up there today is going to be up at the 125, 150 ADR level, which is likely to get at least some kind of rejection. Failing that, the double top is going to be somewhere around the 72. So looks good for potential shorts, that one, the euro odd. But I'm not sure when we're going to see some Australian dollar strength coming through again. We've seen over and over again with this yen, it starts to power up and then it just decides, no, actually I'm going to take my foot off the gas. Then it powers up again, then it takes its foot off the gas. So it's a difficult one to trade at the moment. And obviously the Aussies seem to be nicely linked to the yen at the moment. And the money seems to be flowing into the Aussie regularly. So tricky, but looks like it's nicely rejecting that level. We had such a big drop. But again, still don't know how much of this is profit taking, how much of this is manipulation. So difficult one to trade. EuroCAD, like that as a short. Just got in it. I'm in short on EuroCAD. Nicely extended. The reason I like this is got Canadian dollar news, so I'm hoping for some positive Canadian dollar news this afternoon, and we'll get that pushed down. Euro pound, I missed it. So the M15 entry was this morning at the end of Asia. Just had the reversal alert on that one. So again, massively extended this euro pound. Always short on the euro, but the pound's been very weak, so this has taken advantage. Looks to me like they're starting to undo this move. We've seen some real weakness settling in yesterday, and it looks like it's starting again. But we're nicely extended on the 4 hour. We were nicely extended on the hourly. Looks good for shorts. Always looking good for shorts on the euro. Thing at the moment, obviously, the trouble we have is the pound. The pound is just very, very weak. But again, that is showing signs now of starting to strengthen up. There's some major levels we're getting to on all of these, where we are starting to turn. So euro pound looks like a lovely little short as well. Nicely extended. From a position trading perspective, if you look at where we are at the minute and where we're potentially going on this one, you've got a couple of levels coming up at ADR, and then you've got a nice double top area at 150 ADR. So entries on this, if this does for any reason manage to push and get embedded, I mean, look back in history, it doesn't push and get embedded. It's the euro, it just doesn't do it. But obviously this is unprecedented times at the moment. We've got the pound being the weakest it's ever been with this war going on. So, you know, so I just got a long wick showing on the DAX. I'm going to take a buy stop on that long wick. We've got another IRB there as well. We are showing some rejection up here, a lot of rejection up here. So the sellers are stepping in at the ties here across all the indices at the moment. But we're about to get bullish engulfings on the NAS and the S&P and the Dow. So the other indices are, although they are rejecting up here, we are getting some bullish price action coming in now. Rejections off the 20s on all of those. So looks pretty bullish. We've also got long wicks to the downside. So, you know, this is a perfect, draw it properly. This is a perfect flag. But obviously want to see some break of the highs and then break of the highs. Right, go back to where I was. So yeah, euro pound looks like a lovely short from a position trading perspective. And the fact that we've had this move, I'm going to point it out. Obviously, this is normal price action from here until where are we? There, really is normal price action. This is the war. But you can see, obviously, when we get these big propulsion moves, yeah, on the euro to the upside, they get undone. Big propulsion move, undone. Big propulsion move, undone. Big propulsion move. It's going to get undone at some point. So this is where we will be looking for shorts to start entering the market. So euro pound looks lovely for a short opportunity as well. Why is it? I couldn't make it up at the moment. Picking the wrong instrument. So of all the instruments out there, all the indices today, they're all slightly bullish on this candle. The DAX is the only one that is going completely the opposite direction. I'm just really not having much luck with picking the right thing to trade over the last couple of days. So I'm going to leave my buy stop there. Obviously, I'm looking for the 2050 to support us and take us up to that gap. If we come down and do that one, anyway, we'll see what happens. So yeah, euro pound, nice short. Euro US dollar, just probably got in that one. No, not got in it yet. So euro US dollar, looking for a short entry on that one off of the hourly. Short opportunity on that reversal alert there. I'm just going to move it down below that low as well. because this is going to be a longer term trade. So whether I'm there or there is irrelevant. But looking for some US dollar strength this afternoon to push that one down, and obviously that will be a multi-day hold, and hopefully we can get it into profit and then hold it through non-farm payroll and hopefully get that target down there. So Euro US dollar very nicely extended on the hourly. US dollar's been uncharacteristically weak. We've had the euro being able to take advantage of it, but this is not a strong trend channel. It's very, very weak. Compared to what we usually see on the euro when the euro wants to come down. So last time we got a 4-hour extension, we had a nice recovery, and as you can see, we have not had a 4-hour extension for quite a while on this one, and we've been embedded since this initial spike. So I'm looking for a pullback down to here. If the US dollar is going to considerably weaken from here in, which is unlikely considering they're now got a market for their oil product they've got tons and tons of, we're going to go up there. But it's more likely the US dollar is going to find more strength than the euro because of the war is going to find more weakness. But every announcement we have that is potentially positive for Ukraine and for an end to the Ukraine conflict, we get that spike on the euro. So you have to be aware of that obviously there's a good chance with any stop-based strategy, you're going to get taken out by news spikes. And at the moment, we're getting news spikes happening very regularly. Here's one. Just because there's been an announcement that looks like something might be moving forward with the war. But that does not stop the fact that the Eurozone is still absolutely shot financially and economically. Yeah. So this is a good pullback opportunity where we are right now. Yeah, we've pulled back to here multiple times in the past, back to the 72. Every time we get to the 72, we're off. Nothing's changed economically for the euro at all. They've said that, yes, they are going to go back to level interest rates end of this year, which is fine. That's 6 months away. There's a lot can happen in 6 months, yeah? Look at what happened at Christmas. We were like, hey, everybody, it's a new year. 3 months into it, we've got World War III on our doorstep. So you just can't trust anything at the minute, but the Eurozone is still a bear. So looks like a lovely short Euro US dollar. And US dollar Swiss. To the downside. So liking US dollar strength, but as I say, we've had a lot of weakness this month on the US dollar. The war hasn't helped anything at all, has it, really? Apart from the Australasian pairs. So, again, big, strong pullback, looking for that bounce. Yeah, so we should be looking for the bounce coming in now. How far that bounce is going to be, difficult to tell. We've got non-farm payroll. So the thing you've got to bear in mind, again, with today, obviously, because it's a day ahead of non-farm payroll. Tomorrow morning, whatever price action we get today, tomorrow morning will tend to be an accumulation. So Asia and London tomorrow will tend to be an accumulation. So they will either... it's probably not going to be an example, but they will either basically go into an accumulation in Asia, and then London will whipsaw that accumulation, take out all the liquidity from Asia and sit there, wait into New York, and then obviously non-farm payroll will do whatever the hell it wants. But because we are ahead of non-farm payroll, if this pushes up this morning away, because we're nicely extended down here, and we've just broken out of this accumulation and we're retesting this propulsion move at the moment. If they move it up to here today, non-farm payroll will probably want to come down and take that liquidity, regardless of what the figures are. They will want to use non-farm to do a liquidity grab. This is the obvious liquidity spot. Yeah, they've bounced off of this bottom for hours on end today, and they've pushed away. So everyone's gone, oh, breakout, long, liquidity. Everybody's under here. So if they don't take this out today before they move up, highly likely they will tomorrow. So although this is extended on the 4 hour, you need to be aware of obviously what's coming with news. So this is a lovely support resistance down here. You can draw it any way you like down here really, but it's sort of somewhere around here is our support resistance area. Yeah, highs of the wicks, highs of the bars, wherever you want to draw it, it's a zone here, and we haven't touched it yet. So pulling away today, tapping that and running tomorrow looks like a really good play from the bankers' books. So nicely extended, but just be careful if you're going to put a stop on this. You're going to want it a good I would say probably 30 pips under that low, half an ADR roughly under the lows. And then potentially we're going to run off tomorrow, but we don't know, do we? We have no idea which way we're going to want to go tomorrow, so we'll see. DAX to the Dow. DAX is coming down. Dow's accumulating. So the S&P, the Nasdaq, and the Dow are all accumulating at the minute at the highs of the opening range. The FTSE is doing exactly the same thing. The only thing we've got pulling back at the moment, obviously, is the DAX. I'm just going to go with a buy stop above that last candle as well. We've got an IRB there, so I'm going to enter one there. I'm going to remove that one. Or should I leave it? I might leave it in place. See what price action we get. But hopefully this is going to be a nice, slow, orderly trend up to the gap fill today. I should be across if they come down and do that one first. That would be very annoying, bearing in mind where I got stopped out. But hey, this is what stops are all about. This is how I keep explaining it. You put a stop in the market, you're a target. Anybody got any other pairs they want to have a look at this morning? I've covered everything that's extended on the RSIs. Obviously hourly we haven't got a lot, but those euros, getting into those a little bit early, but I quite fancy them. Especially the CAD based on the news. Just got to try and survive not getting stopped out before the news comes out, basically. But nice reversal alert there. We're just tapping into potential support at the minute. I'm going to have another go at this Euro US dollar. Lovely M formation. Didn't quite get the reversal alert on it, but lovely uneven M this morning on that formed. Good drop. Looks bearish as well. Oh, come on, DAX, don't be annoying. Dow's coming down now, retesting the 20. It is yesterday, isn't it? This is New York yesterday all over again. Choppity chop, chop, chop. We just sat there for nearly 2 hours, wasn't it? Market was not interested. Maybe they've done their end of month moves. Maybe that's it. We've had them. Got to fill out a contract. Government issue ID, driver's license, passport, national ID card, and a utility bill. Does anybody get utility bills anymore? It's very hard to provide a utility bill. Everything's online. Don't get paper. You have to find a utility bill. Looks like I've got my account details already. Oh, there we go. I am live. 50k, real money. Evaluation funded live. Exciting. Now you watch me blow it in a week. Got 2.5 grand to play with. So I just got to build up a buffer of 2.5 grand and then we're off from there. Please don't have a losing streak on Monday. How are you doing on your pound odd, Diamond? Did you hedge it? I know a few people were talking about hedging down here. Where was it? Down here, wasn't it? Or either here? Can't remember. Critical point this. If we can crack this, we're off to here. Still an awful long way away from that moving average. Look, we've stayed away from that moving average for such a long time. Okay, so we're in a 50 to 61.8 retracement. PT partially hedged, 1,748. Yeah, it's always the way. It's always the way. This is why I don't hedge. I've tried it so many times hedging, and it's always when I decide, right, that's it, I've got to hedge this. That is always when that happens. So I have to take a loss on that hedge. But it's the difficulty when you hedge is knowing when to get out of the hedge. For me, close above 125 ADR today would confirm, I think, that market structure is properly shifting on this. This was the first sign of like we're going somewhere. They came down and did the liquidity run. So it's a textbook stop hunt. If you look at this on a lower time frame, it's a wick off spring. It's just, it happened very, very quick. So normally a wick off spring, you have a multiple day consolidation. But with this one, really, the initial move down was here. This was just a spike, but that's the spring. And for me, that is your accumulation breakout. So if you look at it from ignoring that news spike, because this was a news spike. If you look at ignoring the news spike, that's the accumulation. That's the spring. And that is your accumulation at the highs. And that is your breakout. So this is very textbook, but there's just got this weird odd news spike in the middle, which kind of distorts it. So looking for a pullback to yesterday's high. So potentially ADR, pullback to yesterday's high. So if you want to get out of your hedge, looking maybe for a pullback to exit the hedge, which gives you a tiny little loss on the hedge, and then off with aggressive drawdown control positions to the upside. Assuming that is it, but it looks ugly. It just looks ugly, doesn't it? Because of this stupid. And this is exactly what's, the news at the minute is just screwing everything. No matter what you do, the news screws it at the minute. It's awful. Horrible conditions at the minute. Holding the 20, just retesting the opening range lows again. Might get a small pullback and I'll dump the hedge. Yeah, that's it's just this accumulation here and this accumulation here. It's just a really horrible. The fact that rejected there, it's just a really horrible point to try and break, because accumulations are where price hits opposite pressure. So every time you hit an accumulation, you usually get a bounce out of it. You very rarely scream through an accumulation like this. We are today through this one, which is again a very, very good sign. But we're driving straight into the next accumulation. So this area, this 125 area here, I'd be very surprised if we didn't get a pullback off of that. But that is where we're ultimately going to find the next level. But we've seen pound many times just scream out the highs without news. So just not a lot going for it at the minute, the pound, is it? Okay, so just retesting the opening range lows. See what we do down here. This thing's going to come down, isn't it? It's going to come down and it's going to fill this gap after just taking my stops. It's going to annoy me today. Going buy stop above that long wick. Dow's retesting the 2050 zone. S&P doing the same. This is that's the 20 there. 50 is around there. Unbelievable. DAX and FTSE are not in agreement. No, FTSE's flagging still. A minute. It's going to do the gap fill, isn't it? I'll give it benefit of the doubt at the 50. So if we break these lows, I have to say I've got to flip short. So annoying, literally. I think I got stopped out there, didn't I? On the short. One of them was stopped out there. The other one, I'm pretty sure the stop was there and it took me. It did, didn't it? It took me up there. There's a stop order. Yeah, look. Jesus. So that one got taken out there. Position 1, stop. Couldn't, literally. It is on to the pip, my stop. I should have just moved my stop up 1. Can't make it up, can you? God, sometimes you just have unlucky days and you just have to take them on the chin. Right, let's get a nice bullish engulfing here and then we'll play this 2050 bounce back up to the other gap, please. Got bullish action coming across the board. Should have the crickets on, shouldn't I? Let's turn the crickets on. I'll keep the crickets quiet, but German unemployment rates 5% as forecast. I'll be looking to get long on the S&P around 4,600 with quite a wide stop below yesterday's 4,580. 4,500? 4,600. Oops. Yeah. This is not a good gap though, because it's a V-shaped recovery, it's not an accumulation gap. So I mean, it's quite possible we will see some buyers stepping in down here if it gets down there, but prefer accumulation gaps. But yeah, nice round number. Stop under yesterday's low. Assuming we're going long. We've had quite a few days up on the on these indices now. We obviously just got the inside bar yesterday. We didn't get that bearish engulfing, so we have not literally stopped for 2 weeks. We are due a decent pullback on this. We've just broken out of a new high as well. And obviously the DAX did the same thing, but the DAX actually managed to pull back inside looking like a failed breakout, which is why I was playing the short. God. Annoying. So if we get a pullback down and a bearish engulfing today below these lows, I would call that a failed break. In which case, potentially at least a pullback, if not another leg down. Everyone's forecasting and calling for another leg down. You know, it's just war broke out. It just screws everything. Absolutely everything just screwed up. Economies have changed, outlook's changed, supply and demand has changed. It's all changed. So maybe this bear market is not ready now. Maybe we need to give it. We could possibly go into a weird accumulation, which we've had before on the S&P, where we get these periods. We have a collapse, and then we have a multi-month accumulation before we start the next leg. We could be seeing one of these at the moment, which is incredibly hard to trade because bearish price action coming in. it's very difficult to get a directional read on it. So you just have to kind of look at it and go, right, well, we've had quite a few down days here. Let's go long and try and catch the pullbacks. And then, you just have to monitor it, really. But at the end, every day is a bit of a guess. At least when we're trending, which is the vast majority of the time with the S&P, if you're down here, you've got to have a long bias, and you'll have a couple of days where you might get it wrong and have break-even days, but you're going to get it right most of the time. These accumulations are very, very difficult to trade. So that could be what we're seeing here. It's just a mess while this war's on, and then we'll continue the bear move. Who knows? Balls again. Aussie dollar, US dollar. It's also between the 50, 61.8 fib. 46, 45, 46. Depends where you're taking your fib from. There's lots of places. That's probably where I would measure from, down here. Because obviously, just turn the crickets down a bit. This was the continuous move to the upside. That is a pullback. So 40, 45, 43 area, anywhere around, literally anywhere around here. Don't know. Just don't know at the moment. Still got IRBs being formed, so I'm going to go with a buy stop above that last candle. Still playing this as a pullback. This might be one of those sessions where I just cry at the end because I got it all right and I just didn't manage to get the positions on. Never mind. Euro, US, Aussie dollar, US dollar. Okay. We're just in a massive accumulation on this one at the minute. So we've had obviously a very strong Australian dollar, and we've had the US dollar powering up and dropping and powering up and dropping. So it's just gone into an accumulation. So at the moment, obviously you've got the highs. We're range bound. So somewhere up at these highs basically. And we've got the lows there. So that was the final accumulation before we broke into the range. We're coming down towards the bottom of the range. Flip a coin. If we get down to here, anywhere in this zone here at ADR, I'll be long in it. But Aussie dollar is weak at the moment. We've got non-farm payroll and we've got PCE this afternoon. So there's an opportunity for the US dollar to strengthen this afternoon, which obviously could potentially break this back down into this accumulation area here. So shorting it down to there, longing it from here up to there, depending what price action you see. So drop down to lower time frames. When you get down to those areas, if you get a reversal alert, long it. Difficult pair, that one at the minute. At the moment we're range bound. Okay, so we're getting decent rejection back down at the pre-market accumulation. So that long wick. Initial entry. That's a hell of a retracement though, isn't it? A-shaped recovery. So hopefully this will get a dead cat bounce here. Do you know why they call it a dead cat bounce? Because you know cats always land on their feet. Dead cats actually bounce. If you drop a dead cat out of a second story window, it bounces. I didn't know that. I only found out the other day. Somebody was talking to me about dead cat bounces, and I realised I know what a dead cat bounce is, but I don't know why they call it a dead cat bounce. So I looked up, why is a dead cat bounce a dead cat bounce? And the answer was very obviously, dead cats bounce. Why somebody decided to come up with dead cat bounce in the trading industry, I have no idea. But anyway, a little fun fact for you. There's no real areas on any of these other indices that look good for really support where we are at the moment. We just tapped into this accumulation, so this is a retest potentially of that reversal, but market seems a little bit lethargic this morning. Still no ADRs today. Euro yen is getting close. So is Aussie yen. Buyers coming in now. Euro CAD's in profit. Euro US dollar has just triggered as well my short on that. So we've broken those lows that I was looking for after the reversal alert. So short on €2. Humans presumably don't bounce. I've no idea and I don't really want to find out. It would make sense that a cat would bounce because obviously a cat's mass is a lot smaller. So don't know. It's just a weird thing to call it, isn't it? It's like someone at some point in a trading room looked at this and went, every time we get a strong drop like that, we get a bounce. It's like a dead cat bounce. And someone went, what do you mean a dead cat bounce? You know, when you chuck a cat out the window and it bounces. And everybody in that room would just look at him and go, what? First of all, have you ever done it? Secondly, have you ever seen it? Thirdly, why? Why would you do it? You got to have a dead cat to start with. Where'd you get one of those from? I don't know. Maybe he had a cat and he got, it died in his flat and he went, I don't need this anymore. Chucked it out the window and went, oh, look, it bounced. I've no idea. Go and look it up. It's true. Bear's stepping in again. I've got a horrible feeling we're going to get this gap fill. If we do get this gap fill, I really don't know where to play it from there. I would have to say if we get the gap fill and we haven't stopped, I'll be looking for a fade of this move as a long, but obviously it would be counter trend on the day's move so far. So I'm just looking to see what happens in this accumulation. If we can get that break back above that accumulation here, the pre-market, I think we've got a good chance of maybe going for the highs, but also need to be wary that we could just get into a pullback drop situation here. So it's always very difficult to trade a complete A-shaped recovery, which we're getting across all indices at the minute. So the FTSE's even started to drop, but it's only down at the 20 at the minute. Threw a cat out of the window after a bad trade and frustration. Quite possibly, yeah. Maybe it was an alive cat. Died on the way down of a heart attack. I don't know. It's just odd. Okay, so all approaching potential double bottoms. Bank of Japan will conduct 2 market operations per month for JGBs with over 25 years until maturity, 50 billion yen at each operation. So basically the Bank of Japan just laying out their plans moving forward to get themselves out of this mess. Dead laptop pounce, yeah. More likely to throw your laptop out the window than a cat. More likely to have access to a laptop than a dead cat. Logical. One of my spin instructors, a cat, actually died yesterday. Speaking of dead cats, he hated the cat. The cat never came near him for 15 years. It was his wife's cat. For the last month, it had been coming over and sitting on his lap every night. And he was like, "Why are you suddenly getting all friendly?" And then he died. Nice pair of mittens now he's got. Okay, going long one on the DAX with a very small stop. 0.25%. Tiny stop. Literally just playing this double bottom bounce. We're double bottoming on most indices at the minute. A lot of people are going to be watching this area for buyers. Hated the Forex markets lately, yeah. Difficult. Very, very, very difficult at the minute. Way more difficult than normal. Okay, so we're hearing a lot of bear action coming in. We are getting movement. This is the S&P I'm monitoring, by the way. I should really be monitoring the S&P, shouldn't I, rather than the Dow. Let's watch the Dow. The S&P. So, hearing a lot of sellers stepping in. Obviously, we can see there's a lot of sellers stepping in as well. So, what I'm looking for is these orders to start getting absorbed. So, some long wicks starting to form at the lows of these candles, showing rejection and showing bulls stepping in. And absorbing all these orders coming through at the moment. So we've had 1, 2, 3, 4, 5, 6, 7. So we've had 35 minutes solid bear action. So we should see some profit taking starting to kick in. And potentially that could start a bull run. So it really depends with the DAX especially whether or not the market is interested in getting this complete or the gap at the highs complete first. Obviously, we're not going to know that until we see what happens at these lows. So, ideally, we want to hear the crickets go long. Lots of high upticks now, and some bulls starting to step in. But if we break these lows and we hold below these lows, which is why I've got a tiny stop on this. Literally, I'm buying their stop very, very small. If I'm wrong, I'm going to be wrong with virtually no loss. 0.1%, 0.2% possibly. If I'm wrong, it's probably going south, but the reward on it is so tiny. There's more bears coming in at the minute. So we haven't quite double bottomed on the S&P yet. Going with one more buy stop above the high. We're right on the lows here. We're not getting a pop. So when we break a low and we're going to break through, smash through it, we tend to get a pop out the bottom as all of the liquidity here, all the sells here, or the sell stops here, are all eaten up. We didn't get that there. We got a rejection. The bulls are starting to step in. So again, going to see if we can get a bull candle off this. I'm going to enter again on these highs. And then just very, very tight stop under these lows. It's either going to go from here or it's not. If it's not going to go from here, I'm going to take a tiny, tiny loss on it. If it is going to go from here, the reward is obviously potentially up to the gap at the highs, above the highs. So it's a massive risk reward. But high risk trade because it's obviously got such a tiny, tiny stop. Good rejection on the S&P. Dow's rejecting, FTSE's rejecting, everything's rejecting. ECB's Visco, no rate hikes before the end of the APP net purchases. Red news. Don't know, it looks very heavy. Yeah, it does look very heavy. Heavy things don't bounce. Let's look at it like a cat. Boing. So I'm just looking for videos on dead cat bounce, and all we got is trading videos. Cat coin. They've made a coin called the cat coin. Oh my God. Crypto. Good cat emoji. US dollar CAD has completely reversed. I didn't notice that. I only just noticed. US dollar CAD obviously had that really nice down move at the open. Completely off the other way now. Your strong US dollar. Obviously this is why we're getting this push down, because the US dollar is very, very strong at the moment. Which is nice because my Euro US dollar short is nicely in profit. But it doesn't bode well for this pushing up. Peter, you've got some Dogecoin. Don't ask me why. I think everybody bought Dogecoin. I bought Shiba as well when that came out. You know, this is exactly why I don't trade crypto. Exactly what you just said there. Don't ask me why. You bought it because the masses are buying it. The masses aren't necessarily any experts whatsoever in anything to do with crypto. They probably don't even understand what crypto is, but everybody just buys the crypto that everybody says the crypto, we should be buying Dogecoin at the moment. Why? Elon Musk said so. Did he? That's because Elon Musk released Dogecoin, probably behind the scenes. And he's got millions and millions of it. So if he tweets and tells everybody that Dogecoin is the next big thing, it's going to go up. Therefore, immediately he sells it. Yeah, it's just there's so much of this manipulation on, and all these pump and dumps that go on. Just the whole market is completely corrupt, that crypto market, which is a shame because it had an awful lot of promise. But and this is why crypto has now become linked to the indices. The proper crypto, like your Bitcoins, are now just linked to the index. So yeah, the index goes up, so does Bitcoin. The index goes down, so does Bitcoin. It's just all become another fiat currency now, really. You got some Shiba as well. I've converted all of my crypto, bar Ethereum. I've converted it all back into US dollars, into dust basically. But I don't see the point in trading crypto at the moment, or holding crypto. The days of the crypto, this is where you needed to be in Bitcoin. Now, it's just pointless. You've missed it. This was Bitcoin. 2020. You need to be buying this in the coronavirus, in the corona pandemic. Now you're just trading another instrument which has no underlying fundamental. Therefore, there are a lot safer things to be trading. We can guesstimate and preempt when indices will move based on earnings and all sorts of other things. This thing, you've got no real driving force that you can really measure to understand where it's going to go. So, gold, oil typically go up in conflicts. Indices are linked to tangible companies. Bitcoin is just something that somebody made up, and unless you have a real solid understanding of the intricacies of the blockchain and what impact other crypto is going to have on this thing, the Russians could basically send this thing to the moon by turning all their rubles into crypto and saying we now are crypto. There's all sorts of stuff that can happen to this thing. Virus. Can you imagine a virus getting into the blockchain? What that's going to do? $47,000 every Bitcoin is worth at the moment. Imagine a virus getting into that and everybody's Bitcoin being sent to zero. Bankrupt. But, it's a computer. Why can't it? I'm just not interested in it. It may well be the future. But if it is, when the banks start to allow me to transact in crypto in the shops, then I'll look at it in more detail. But at the moment, I don't want to buy guns and drugs on the dark web, so I'm not interested. We're going short. Big rejection on the DAX. All the other indices are looking to do the same. You just know if you flip short on this thing now, it's 0.2 loss there. That was worth a try, that double bottom. If you flip this short now, you just know what's going to happen. This thing's due a pullback. I wonder if they've just taken out everybody that's just shorted. US dollar CAD looks amazing at the moment on daily for bulls. Yeah, lovely. It's not even 3-bar reversal, is it? It's just a hammer and a bullish engulfing. Still need to break these highs. Got this big old wick here. But yeah, I like the look of that. Euro US dollar short. Still in profit. Euro CAD just about still in profit. This is a really tricky one today. So we've broken those lows. I'm struggling to sell this for 30, potentially 30 to 60 points to the downside, but we haven't breathed at all on that move. It's very hard to short it down here. Just to get that gap. I suppose it's a one-to-one, isn't it? I'm going short one with a one-to-one risk reward. Just cancel all those pendings off. So this is basically a one-to-one going for 1%. Down to these lows, giving myself a 50% retracement to get there, and hope for a new spike with negative war connotations, and then that'll just get straight down there. But this could take a few hours because we haven't had a breather literally on this entire move. We have broken the lows, so we are on the way to the gap fill. Whether the gap fill is going to be there or there is difficult to tell. It only really needs to do there, but typically we would tend to find it go for the actual close, but more often than not as well, it will go for that as a block. If you look at this on a higher time frame, like M15, yeah, that level there is quite easily filling the gap. So we had price action before the close here. So it could only have that far to go. So what I will probably do is when we get down to there is move to break even on it just to protect the position, or maybe even move the stop down. I'll have a look when we get down there, if we get down there. But this thing I think probably needs a little bit of a pullback before it gathers some momentum down there. It's been very, very slow to get there. I kind of feel like I'm buying the lows, selling the lows here. But it's certainly not a very quick market today. But we'll see. And then obviously we've got this to fill. So mixed feelings about today's session. Those are where we're heading. Obviously this is where I thought we were heading first of all, just unfortunately got stopped out just before the run. But once we've done that, on the daily, we need to look at where we're potentially going to be going from there. So at the moment, we've had a lovely big bearish engulfing. So if we get all the way down today to there, it's quite a lot of work to push all the way back up and then come down again. So we may find that we get this gap orphaned to come down and make this a false breakout. So if that becomes a false breakout, we're definitely going to be looking probably for those lows, but more likely for that, and potentially obviously for another leg down. So difficult again today to forecast direction on it. But those are the plays really. So got to look at price action really and make your mind up as to whether you want to be a bull or a bear on this today. There's a lot of reward all the way up to this 14,830 level. But we're so close to doing this. Makes sense to come down and do this first, obviously, doesn't it, today? But then again, we said that the other day, didn't we? This one here made sense to come and do this gap fill, didn't it? We pushed up, we came down, we were literally that far away from completing the gap. We decided to come back and do it a day later. So, we're on our way to this. Who's to say we're not going to go, actually, yeah, let's go and do this one first. So those are the options. Need to just watch price action. At the moment, it looks like we're still going there. We just made a new low. So we are still putting lower lows in. As long as we continue to put in lower lows, it can do what it likes. But every lower low is a step closer to getting this filled. Right. So that's my play for this morning, for the rest of this morning. This could take half an hour, 2 hours. Who knows? I'd be very surprised if we get this in one move without a pullback. But I mean, it seems to be wanting to do that, doesn't it? So I think at the minute, I'm just going to hold this down to there and try and get 1% back, which is virtually break even for the morning session. And then watch price action down. Watch price action down here. So when we get to here, I'm going to be watching price action literally to see if we're going to get a fast move back off of that. If not, I think we may be coming down to double bottom this. If we can double bottom this, I shall definitely be looking for a pullback play on this, because by the time it gets down to here, this thing's going to be so extended, it's going to need to breathe. So if we can get down to this target, I'll probably reverse there and look for long opportunities. So that's the play for the morning. Whether or not it goes, I mean, I'd be very, very surprised if we undo this entire move today. I'd say that's probably a higher day in now. But pull back, and then by the time we've pulled back, we'll pretty much be New York, won't we? So interesting. My broker data has the end of period an hour later than you, and it makes a huge difference to where the gap is. With that I mean, Frankfurt closes when Frankfurt closes. So if your data's, your broker though has a pre-market, doesn't it? So yeah, your broker won't close at Frankfurt close. Your broker will have aftermarket and pre-market data. So this is where, like, I think it was Andy or Adrian said yesterday, go and have a look at TradingView. Look at the TradingView data, because that's, the exchange really that they're showing there. So but yeah, obviously it will be different. What's my other, my Forex funds? When does that show? End of market. So my Forex funds, has price data all the way until 11:55. So that's my Forex funds data. Where's the... I've got rid of the... Auto scroll. There we go. Put that back in. So my Forex funds basically is trading up until 11.55. So yeah, you will have different data. This is why I kind of like this one. Watching the cash index. You know, you're watching the actual market. So we've got green candle potentially going in. Got 2.5 minutes left. 3 minutes left on this candle though. So this could just be a push up, and then we still close bearish. But I'm anticipating a pullback. So I've got fairly wide stop on this one. Anticipating a bit of a pullback down here, but we have broken these lows. We didn't just, we stopped, paused, we broke, we continued down. So this is definitely a breakout of these lows. So we should be good to get down here, but I think we'll probably want to move. We've got no accumulations on the way down. So you're looking at green candles as potential points where they will trade back up into. So this is where the bulls started to get some power in. So these are really where you'd look for pullbacks or to fib levels. But this thing looks like it just wants to go there today, doesn't it? Get that done. Nice fade. So frustrating to get stopped out literally at the high of day. The very pip of the high of day. And then the entire move unfold. I would never have got out of this. This didn't give us a reason to get out all the way down. Look. Literally, I'd still be in this now, pushing my TPs down all the way down to here. So annoying, but them's the cards you get dealt. Tomorrow, I will hit the button and it will have a news event and it will spike 3% in my direction, and I'll take that as well. So you take the winners. When the market wants to give you a load of money, you take that as well. Don't complain about taking the money. Don't complain about giving it back. Now you can do. Right, so just watch that low. Not quite. So that's the low. The potential point where we may well have a bounce. Let's see what kind of reaction we get there. If we can get a nice close through that, I think we should be good to go down to there today. I'm just going to move my TP just above in case they come to the pip. Let's have a look at what... Right, S&P, we've got a triple bottom on the S&P. Stopped to the pip. Need to see some bulls coming in now. Some bears coming in now. Nasdaq, we haven't made it yet. Dow, we're below. Critical point, this. See, there's a lot of volatility starting to pop in now. A lot of people starting to buy this low. So let's see who wins. US 30s triple bottom in as well. Wow, that's a really different chart. It's not a triple bottom. On my other platform, that low is there. That's a triple bottom, this candlestick. doesn't have this wick. Interesting. This is obviously broker difference, yeah? This is why you trade your own charts. Anybody trading this on my Forex funds is seeing a triple bottom form. I'm not. I'm seeing a new low. See if we get a test of this wick. See how orderly this has been on the way down today. We've left one gap in the market. We came down, left a gap there, came straight up. Sellers stepped in on that gap. We haven't had a gap form yet, apart from there. Obviously that first move was a tiny one, but so if we can get up to that wick or higher and then go bear on this, just nice and efficient all the way down. EU is going well. Might get a better day than yesterday, hopefully. I did a good day on my Forex funds yesterday. I did $800 yesterday. Yeah, nice moves down. Euro CAD and Euro US. Can't hear the crickets. There's no volume in the market at the moment. As you can see, I mean, we're just not ticking anywhere, are we? Very, very little liquidity in the minute. US dollar is really, really strong. The pound US dollar and the US dollar, obviously, as we just seen, coming down very hard. US dollar CAD has just done a lovely pullback and turned really, really strong US dollar, which makes me think tomorrow that for the non-farm payroll, they're really going for some levels on the US today. We may see some decent ADRs hit. Nowhere near ADRs yet on anything. Euro yen. There's a few getting close on the yens, but not a lot. Okay, so we've got bear bull candle at last. Whoops. So we've got a tiny gap, and we're bouncing off the potential support. We got a quadruple bottom on the S&P. This level, this 46.08, they are really not interested in trading below that at the moment. So we need to see this break. There's going to be a lot of liquidity sitting under here now. The initial people that saw this double bottom and entered long here, their stops there. Everybody that came down and saw this triple bottom and entered long, their stops there. Everybody that's seen this pull off of that low and has seen a quadruple bottom, their stops there. If we take this out, we will pop out the back of that very, very quick. We should see that get eaten up fast if they're going to go lower. Otherwise, that's just going to take that and reject and disappear. This is the 90-minute opening range low as well we're sitting at, which is quite often low of the day. There we go. See that? Immediately bought up. Somebody sitting on 46.08 hitting the bid. Here come the bears. So somebody's sitting here defending this position. Every time we get here, they're dumping hundreds of contracts into the market, not letting it go. There's a lot of selling pressure coming in though. It's been interesting hit this. If this breaks, if the S&P breaks through that strongly, we should see the DAX fly down there pretty quick as well. FTSE's starting to come down. The Dow's just broken new lows. But someone is sitting here with a lot of money. New highs on the US dollar CAD. There we go. We've stalled here, rejected. So move my stop to break even. S&P, whoever's sitting here hitting this bid has got a lot of buy orders to execute. We could see a very quick propulsion candle going here. Every time it gets down to here, it's being absorbed by the buyers. The wrong oops, this is not set up for the S&P. Bet on this 5. Really wide spread on the S&P. So I'm going to take a long down here on the S&P. DAX. Looking by what's happening on the S&P and the other indices, they're all starting to show bullish signs down the bottom here. We've got 10 seconds left on this candle. This low is rejecting again. DAX is struggling at the lows as well. So this could well catapult off the bottom here. So I'm just going to give this candle, the start of this candle, give it a minute. See if we can get this bottom broken. And if we can't, I'm just going to take this off, put it in the bank, because this is looking like we're starting to see some bullish price action coming in down here. As I say, it needs a pullback. It's too much selling action without a rest or without a profit take. Yeah, closing. 0.4. 0.4. Puts me down 0.8 this morning. Here come the crickets. Okay, just going to buy one at market. with a very tight stop, very, very small risk. Very tiny risk on this. Literally, it's going to be 0.1% or something. This is a really nice quadruple bottom. We managed to tick down once through that level, which was the final push on the sellers, and that buyer just stepped in and went nope. So this looks really bullish down here. We can hear the crickets coming in, the buying. There's a lot more buying volume coming in now than there is selling volume. So looking for a pullback, not necessarily a push higher, but a pullback on this move. It's a scalp long somewhere on this move. So class that as complete now, this gap fill. May get down to there, obviously, it can do what it likes, but technically I think that's probably done. God, I hope that contract for my Forex funds isn't really, really long and hideous. Oh, 3 pages. Excellent. I like that. So, client shall pay independent contractor, me, 75% of all profits in the first month, 80% of all profits generated in the second month, and 85% of all profits generated from the third month. Independent contractor will not be reimbursed. All costs and expenses incurred by the independent contractor in connection with performance, blah, 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 blah. Standard stuff. 3-page contract, that's better. My contract for Apex was like War and Peace. Literally, it took me about 15 minutes to read the thing. Like it. Short and simple. Okay, bull move coming off the lows. So watching this for levels on this pullback. So this could be a pullback. It could be a reversal. So we may well take out these highs and be pushing long today. Obviously, DAX has got the gap fill to do, so that would make logical sense. If it's a pullback, 38, 50, 61, as usual. Somewhere around there is where we would look for pullback area. So are we bearish? Are we bullish? That's the decision you need to make now. Are we pulling back or are we reversing today's moves? The US dollar is still pushing strong. So I would say at the moment, if the US dollar is going to continue on this current strength, we should probably look for a pullback drop. But keep an eye on the US dollar. If the US dollar suddenly falls out of bed and becomes really weak, we'll quite possibly see the indices shoot off to the highs. I'm not going to take a long on the DAX. Well, should I take? I'm not going to take a long on the DAX as well. I'm just going to play the S&P at the moment because I'm long on it. This was a much stronger reason to take this than just the gap fill, because we've got that doubt in our mind about potentially coming down to do a proper fill on the gap, whereas this is obviously a quadruple bottom with a rejection. We've seen the buyers, whoever's sitting here hitting the bid, stepping in and just pushing this away. So it's a much nicer trade and a very small risk. TP is that's 4% up there. unlikely to get up there. I'm just going to watch and monitor it, see where we get to. But if I can get to 0.8, that brings me break even for the day. So I'll probably close off 1 if we can get to 0.8. We're going pretty quick. That's the opening range low retesting now. Again, obviously, with an opening range low breakout, we quite often see a retest drop. So just need to be aware of that. Opening range low breakout, retest. That is also 38 retracement. So just be wary. What's the time? 10 o'clock. Okay, we're pulling off the opening range quite substantially there. So I'm just going to reduce the risk on this underneath, basically pretty much on this low. I don't think we're going to come down and retest this low. If we do come down back to this low, I think we'll break through it, because this could well be just the pullback and drop. As I said, it's a strong trend. So in a strong trend, you get a weak pullback. A weak pullback is a 38 to a 50. So if that is going to be the case, when we get down to this low, we're going to break it by the looks of things. So I'm just reducing the risk on the position. If we're going to obviously push, I would look for a pullback which won't come back down anywhere below there, and continuation. So just covering that position, reducing the risk as much as possible on it. DAX is rejecting the 20. And obviously rejecting this initial accumulation. So could still be looking for bear moves on this, but so I'm going to play this basically. I'm just going to play this trade today for this morning. Going to try and get this ridden up and just watch price action really around here. Obviously, this accumulation drop here is potentially where we might see some. We could see sellers stepping in at any point, literally on this move, because it's non-stop. So buyers have got a tough job cracking the highs now. So I'll either get stopped out of it down here. If I get stopped out of it down here, not quite sure what I'll do with the rest of the morning. Probably leave it alone, to be honest. Just unfortunately got the direction slightly mistimed this morning. But obviously, if this pushes, I would just trail stop up to break even and see if we can get these highs taken out. If we can get these highs taken out, we're off. And obviously, the DAX has potentially got the gap fill to do. So there is reason for bullish movement today. Obviously, on the daily, on the US indices, we are bullish on all of them. We had inside bars yesterday, which are bullish. So there is potential for another bullish move up today on all of these. The DAX obviously is completely the opposite and bearish. So real mixed signals between the two, but we are trading the Frankfurt session. So the DAX is the one that will be manipulated the most during this session. But we'll see what happens with these. All right, so I'm going to leave it there this morning, guys. Anything else you need, let me know. The euro trades I've got on, euro US dollar short. It's just pulling back slightly at the moment. So we've got this. This is the US dollar pulling back at the minute. And the euro CAD. So euro, a little bit of euro strength coming through on that one. So those are the two shorts I've got on the euro as well at the minute. Hopefully we get those nicely into profit. But these are more swing trades I'm looking for. Big moves over a couple of days on these euros. We'll see how we get on. So news-wise this afternoon, obviously we're back on at 2:20, 10 minutes ahead of the New York session. So just be aware of GDP on the Canadian dollar at 1:30, and we've got PCE at the same time as well. So the news is all happening at 1:30 this afternoon, and we've got PMI 15 minutes after the market open. So these are your main influencers today. Of where we might get some spikes in the market, but it's all just trending quite nice and hard at the moment everywhere. So a little bit of US dollar weakness starting to show now at the minute. All the US dollar pairs are pulling back, which is why we're getting this move up on the indices. So that's the plan for the morning. So I'll be back at 2:20. Anything you need, let me know. Otherwise, hopefully I will see you 2:20. Have a good morning.